Welcome to the only video you need to learn how to trade price action like a pro. Hey guys, my name is Madison, better known as Mads the Trader. And if you're new here, I have been trading Forex for the last 11 years and I have been exclusively trading prop firms for the last 6 years. Throughout my 11 years in this industry, I have only traded price action. So I am talking support and resistance, Fibonacci, trend lines, candlestick patterns, candlestick formations, all of that kind of stuff. I don't use any indicators unless you want to class Fibonacci as an indicator. And today I'm going to be walking you through my exact strategy, utilizing every element of said strategy and including some discretionary gems that I have picked up over the years. And if you're new to trading and you're not sure what the discretion element is, that is just simply something that you build over time from gaining experience in the markets. So this is just patterns that your brain recognizes that aren't exactly your strategy, but you know you've seen it before and you can kind of expect something to happen and you know what that is. So I'm going to be doing a full top-down analysis, utilizing everything that I use and showing exactly how I use my strategy every single day. So top-down analysis, we always start on the monthly chart, no matter what. If you're doing this on a month-to-month basis, then or a week-to-week basis, then always look at the monthly. Even if the monthly candle hasn't closed, because you want to see where could price be going. You kind of want to gauge what the candle is doing. But day to day, we don't need to look at monthly or weekly. The lowest we need to go or the highest we need to go is the daily. But as this is a fresh video and I know a lot of you guys will be completely new here, I'm going to run down from the monthly. So monthly, all we want to look for on our monthly chart is areas of importance. So we want to look for our support and resistance levels. I'm going to change my chart quickly because this is not a great one. Okay, let me remove all of these and I'm going to do it completely fresh. Just because the Aranda chart only goes back to 2013 for some reason, but I want to see more of the left. So this is a lot better. We can see a lot more price action and we can kind of gauge better areas of support and resistance. So if you're opening the chart and you can only see as far back to 2013, I think it was 2003 or 2013, then you need to find a new chart where it should go back to around 1985. So as I said, the first thing that we want to do is find our areas of importance. So our support and resistance areas, levels of liquidity, whatever it is you call it. My favorite is support and resistance because that is how I learned it back in the day. So we're literally just looking for areas where we can clearly see that price has reacted from. They don't need to be perfect. You don't need to have just a straight line, which I know some people teach. I like to have a full rectangle box just so I can see the area. I don't need to see specific price. And you don't need to do many, 3, 4, 5, however many you can see on your chart. You don't need to overdo it at this point because it's really not necessary. And I like to keep my charts as simple as possible. I don't want my charts to look like a child has scribbled all over them, which I see you guys. But for the monthly, that is pretty much all I am going to do. From there, I'm going to step down to the weekly. And I forgot to mention, I am doing this on GBPUSD because this is my favoured pair. This is what I predominantly trade 98% of the time. So weekly is just more of a zoomed in view of what we were looking at on the monthly. And this is kind of where we can see what price is currently doing. So as you can see, stepping down to the weekly, there's not really much else that we need to add. Maybe another level of support down here because we can see that price has rejected there. And then also another one up here. So it's literally just areas, guys, that you can see price has tapped into multiple times. I'm just going to stretch that across. And that could be an area of interest should price get to that point. So as you can now see, we now have our monthly and we also have our weekly. And I know a lot of people tend to change their colours from like the monthly and the weekly so they can differentiate. But for me, all I want to know is that that particular area is of importance. And then I can investigate further as to why, where it's coming from, and what we can be looking at. I don't need a million different colours on my screen because that just hurts my brain. Hurts my brain, guys. So again, weekly, that's literally all we want to put. We don't need anything extra on the weekly. Stepping down to the daily. Now, this is what we're going to be looking at predominantly day to day. So on a, I don't know, Friday evening to Sunday evening, that's kind of when you want to do your full top down when the market's closed. So that's when you're looking at the monthly, weekly, and so on. Whereas day to day, all we want to really look at is our daily and down, because there's no point keep going back to the weekly and the monthly. We've got our levels. We don't really need to do much else. So daily, this is kind of now where we're looking at our direction. So we want to see, where is price going? What is the trend of the market? Are we trending? Are we ranging? Or are we just choppy right now? So as you can see here, we are trending. So we are making higher highs, higher lows, and now we've just made a new higher high. Now, price action for January has been quite difficult, just because price is it's just not been sure on what it wants to do. So daily, all I'm trying to figure out is what's my bias, where's price going, and from this I can see that price is pushing higher. We've had since January last year, we have literally been bullish ever since. So we've literally just making higher highs, higher lows, higher highs, higher lows, and so on and so on and so on. And now January, last Tuesday, we did make a complete new high. So not complete overall high, but for the last couple of years, we've made a new high. So we're bullish. Very, very evident that we are extremely, extremely bullish. Now, what I am going to do, stepping down to the daily, and this is more to just show you guys everything that I utilize. So one major thing that I utilize is trading channels. So I like channels and I also like wedges, and this is just to kind of give me just some kind of indication as to where price may be going. I'm going to adjust that one actually. It's kind of hard to draw the one once you've already seen what's happened from it. Is it here? Yeah, so price was around about here. And as you can see, price kind of, it's not perfect, but you can kind of see where I'm going with the idea of this channel. So price literally, was it this one? No, it wasn't. These make a lot more sense when you are actually doing it live and are waiting. But this was kind of the move that I was looking at from this channel. So price was just kind of bouncing around in this channel until it got to a point where it couldn't hold any longer, dropped through, and this is kind of like, I always say liquidity grab, because it semi did break structure, but as you can see, price continued pushing up. So this probably isn't a great example, but this is what we're working with right now. And then we also had a wedge coming out of here. So explains why we had this drop down. Usually when we have we come to the end of a channel, we usually just have a drop down to basically to create a new higher low should it be a rising channel. Sometimes it will come down to the bottom of the channel before retesting. And retest before pushing up again, but as you can see here, this didn't happen. So I'm going to remove that channel, and what we're going to focus on at the moment is this wedge setup. So channels and wedges are something that I use quite heavily, and there is also something else that I use quite heavily. If you guys know me, then you will know exactly what I'm looking at here. So as you can see, this was a very, very perfect wedge. We've got 2 taps on the bottom one, and we've got 2 taps on the higher one before pushing and breaking through. And then you can also see that we did actually retest it perfectly. So we broke above, we came to this resistance level, came back down, retested the wedge, and price has been bullish ever since. So this is this is kind of where we add everything together. So if we were looking at price from around here, maybe here, this is kind of where we want to start adding our complements is. So number one, we have a wedge. We also have number two, we also have the fact that we are kind of sat within this major support and resistance level. So we are expecting some type of reaction from this price action. Not only that, we have then formed an inverse head and shoulder. So inverse head and shoulder is essentially a left shoulder, a head, and then a right shoulder that looks like it's upside down. And then we also have a neckline, which is usually at a resistance point. So we'll have somewhat of a double top at a resistance point that comes back down and forms that right shoulder before breaking through. And as soon as we break through the neckline, that is when we know price is absolutely bullish. However, this trade just happened way too quickly for me. I couldn't get in because there was something that invalidated here. So I will walk you through what was invalidated. I'm going to take the wedge off just so you can see. And you should be able to see the inverse head and shoulder a little bit better as well. So left shoulder, head, and right shoulder. Now, what I was looking at was I wanted to see a fib move. So my last fib move was from here. So we had the A, the B, C retracement, and then we had a huge, massive bullish D extension. So what I wanted to happen from here was a new fib to be formed. Oh no, sorry. Let me backtrack. We have A, B, C retracement, and then this was the D extension that I was hoping would form a new Fibonacci sequence. So, rule of Fibonacci, A, B, C, D. Once a fib has finished, which this fib sequence is completed, we then make the C become the A, and the D becomes the B to form a new Fibonacci sequence. So what I was hoping for, I think this was around 2 weeks ago now, I was hoping for price to come back down, tap into this 78.6% level, which it did perfectly, and then push up from there. However, this happened on a Friday, so market closed, and then on market open on the Sunday evening, price gapped. And that there completely invalidated my setup on this occasion. So I was like, right, okay, I've missed that one. So let's wait to see what happens next. So I then saw, okay, price has pushed up. We're very bullish right now. Price has a lot of momentum. We've also broken above this level here, which was the last kind of resistance level. So this for me was confirmation that yes, price is bullish. So we also came up and we came to this resistance level, which we can clearly see is a huge resistance level. And then price, it started to reject. So I'm like, right, great. This is a second opportunity for me and I can get in this trade should my criteria be met. So Fibonacci, a huge part of my criteria. I can see we have this somewhat of head and shoulder formation building up. We have slipped the 78.6%, but we have now broken structure and it does look like we are super, super bullish. So I am awaiting this right shoulder to be formed. But my textbook strategy is the right shoulder must land on a fib. So, and this is kind of where traders get stuck because this was clear manipulation. This was also taking into consideration the fact that the government shutdown has made data releases really, really late. So all of this kind of goes into this missed move, which is very annoying, but I'm not too mad about because my strategy didn't quite fit the criteria that was needed. On a discretionary basis, could I have got in? Probably, but I didn't. So, as I said, right shoulder, I'm expecting to hit my fib level. So we've got the A, the B, and what I'm expecting to be the C retracement didn't quite hit my 61.8% level. So again, I missed this entire move. And it's been very frustrating, but nonetheless, going back and looking, my strategy is there, but maybe I was just a little bit too strict on the fib element of it. And not taking into consideration the fact that this was a manipulation. So if I pull this up to here where the 78.6% was, you can see that this probably would have been a valid trade. So in between the 61.8% and the 78.6%, I do have a golden level, which you can only find in my community. And that price did actually tap that exact level and pushed up. So had this manipulation not happened, then price maybe, well, I would have taken that trade. That would have been a trade that I took. But yeah, so that is literally my strategy. So we have paired together support and resistance, a wedge formation, somewhat of a channel formation, but not completely perfect, an inverse head and shoulder formation, and also a Fibonacci. Multiple Fibonacci's to kind of give us this, what we were looking for, this bullish move on GBPUSD. So I hope you guys take something from that. There is obviously a lot more in depth that I go into within my community. And if you guys would like to join that, then the link is in the description below. In the community, we have a full Forex course going from the absolute basics to the more advanced price action. And it is price action only. And we then also have a course dedicated to indices. So my business partner, Katie, predominantly trades US 30, and she has made the switch from Forex to indices. So she has created a course to help other people who also want to make that switch and just kind of make it easier for them, because there are some differences in some of the terminology used, and because indices are obviously predominantly bullish asset, it is a little bit different to trade. We also have a full psychology course in there, and we also do weekly live calls with our community members, and every community member has the chance to book a one-to-one with me and Katie. So if you would like to know more, then obviously join the community. If you have any questions, please drop them down below. And you can find me on social media at mads.thetrader on Instagram and madsthetrader on Twitter. Make sure you go and subscribe to the Rise podcast, which will also be linked down below, in which me and Katie interview traders every single week and talk all things markets, trading, investment, all things finance. If you have enjoyed this video, please make sure you like, comment and subscribe and hit the bell, because I need to know that you guys want more, because I understand that I'm not the best at dropping videos all the time on YouTube, but I am trying to get better, because I do want to provide you guys with as much value as I can. And I've been in this industry for 11 years. I know a lot, I have seen a lot, I've been through a lot, and I know a lot of people that can also help you guys too. So follow along for the journey, and yes, I will catch you guys again next week.